money on my mind. Gotta hustle and grind. Financial literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What's good, everybody? It's your boy Reckless Ray Narrow, and we are back at it again. The May numbers are in. We're back at it for another portfolio update. So what we're going to be doing is we're going to be running through the receipts. This is my monthly receipt episode. Granted, we give receipts throughout the month as well, but this part of the month, the beginning of the month, the first full week of the month, as long as it doesn't begin on the 1st, because if we have a Monday on the 1st, I'm not holding myself to that standard because I may or may not have my numbers done and calculated. It's just what it is. But the first full week of the month, we come in and give a look at the situation, where we're at, what we're doing, how we're moving, grooving, vibing, sliding out here in these financial streets. The portfolio update is a big one. It's one of my favorites. Because it gives the receipts. It's the proof. Because anybody can put together a snowball analytics snapshot and give you a curated snapshot where you're not 100% sure if it's real or not. Are these real dollars? Is this real money? And over here, I give my receipts because this is not financial advice. This is me documenting my financial journey. And, hopefully it helps some of you guys. But if it doesn't, not that big a deal because I'm doing what works for me and I don't have to go to work. So I don't have to report to a 9-to-5 at this point. We are work optional. And it just shows that a couple of the common tropes that we hear of, you got to have over $1 million to retire. You got to have $2 million to retire. If you don't have $10 million, then you ain't got no money. Well, that's cool. But the goal and the focus of this is to break free of the matrix, which means not having, keyword having, to report to a 9-to-5, to a W-2. And you don't need $1 million to do that. And I'm going to show you exactly why. So we're going to go ahead and jump right into it. Before we do that, do not forget to hit the like. If you're on mobile, go ahead and hype the video. Don't forget to subscribe if you're not. And don't forget to leave me comments because I like the banter. I like the back and forth. I like answering questions. I like talking about money. So don't forget to hit me down in the comments. Let's get this show on the road. Boom. Oh, I left my banner up from the other episode. Goodness. Okay. Workflow, people, workflow. So I'm actually going to go ahead and micro machine myself. I'm down here in the corner. For those of you who do not know where I'm at, I'm down in the corner. For those of you watching, to see if there's actual receipts. So the first portfolio that we look at is our in-home banking portfolio, which we've emptied out. We went ahead and consolidated that into the primary income portfolio for efficiency reasons, because this is going to be a targeted living expense portfolio moving forward. And I'm probably actually going to go ahead and relabel that after I get done recording this. But not much going on over here. We got our 2 shares of Chippy and a bunch of dust and stuff that we just can't get rid of. So the 2 shares of Chippy are doing what they do. We've got we got a little bit of cash sitting in there, I think that actually we should probably go ahead and buy and get rid of some of these other positions, and we'll probably be doing that too, so that way we can get this more efficientized. Obviously, that Chippy position is going to be the first position. Our goal is to get about $10,000 in Chippy in here. We'll be focusing on that after we work on the next portfolio. So the next one we're going to be showing is our long-term holdings. Now, there's been some action in the long-term portfolio, and actually we're showing this. The market is still active, so We can see that the portfolio in and of itself is sitting at 6.85% in the green, which totals $693.46. We are still sitting above $10,000, which was a target metric for this portfolio. We're at $10,811.49. We have deployed our $500 deployment. Normally, after I pay down my margin, I deploy $500, but we're doing something a little bit extra with this portfolio at this juncture because we've got a little income in this portfolio now because of the optimizations that we made. Namely being that we went ahead and took our Bitminer position and converted it over to the Defiance option income position on Bitminer. So that way we can get paid off of our Bitminer position. Bitminer was a secondary position. You know, they're trying to be the strategy of Ethereum, and I am a holder of Ethereum, but I also want that income coming in the portfolio. So as far as a portfolio optimization, I went ahead and switched that over to an income producing position. So that way it's chipping away at that margin as we are hitting our certain metrics for reinvestment, which we're pretty consistently at minimum hitting the reinvestment metric for reinvesting in the primary portfolio. But this helps pay down as we go through. So we can go and do a rundown on the positions. Obviously, this is live market as I'm recording this on Monday, June 8th. We've got ASST, which is our Strive position. I've got my 250 share target there. We are sitting at a positive of 64.51%. Workhorse, you know, a deal's a deal when you see it. I am contemplating adding more as long as we're sub $20, but I'm not really worried about that because I'm letting the runners run. I don't need to chase. And at this point, I would feel like I'm chasing because this is not on sale any longer for me from when I got in. But I'm happy with the 250 shares. Hitting that target was a good one for me. This was a moonshot. The copper one, Res Corp, CEXFXYF. And every once in a while, I'll throw one thing that some random person on the internet tells me, oh, yeah, you should look into this. It's going to be big. You buy it, throw $100 at it, and let it ride. Fortunately, I did not put a full $100. I put $30. And if I would have put a full $100, this would have been a terrible waste of $100. But it's gambling money. We're probably going to be getting it up out of here. It's not needed. We got plenty of other stuff going on. I'm probably going to liquidate that position after this recording. I have continued adding my Metaplanet position, but I'm doing it without having to pay the additional fee for the international straight up stock. They have like a representative share on the United States side. So we've started dollar cost averaging on that, and I will continue to dollar cost average on it because it is dirt cheap. So all of my dust, I can scrape money into that easily. I might tax loss harvest the actual Metaplanet position and go ahead and roll it over into that as well, just so that way we're preparing for tax season, because I'm feeling this year that those tax loss harvesting moves are going to be beneficial. So we'll see what we've got going on with that. But so Metaplanet's doubled up in here, so it looks like I have more positions than I do. Because before I realized that they had a representative share that I could buy in the United States without paying $50 per transaction to buy the international stock, I went ahead and just bought the international stock. MicroStrategy, we're still buying a share basically every opportunity I get a chance to, especially at these rates. I will be keeping an eye on it because the next time it dips below 120, I will be picking up at minimum 4 shares, probably 5 on margin to, fill that coffer. We are down 8.94% on the position, but it's a dollar cost average long hold position. I don't have near enough shares, and this one consistently on sale. Next, we have PER, which we've added, which is the hyperliquid strategy. They're trying to be the strategy for hyperliquid specifically. That is my altcoin play. I am kind of done with direct altcoin plays. There's the stuff that we're getting over on the traditional finance side. Since I'm in and out of those positions, they're not necessarily long hold positions, with the exception of Ethereum. I'd rather just take those runs on the TradFi side in this portfolio. Hyperliquid is a player. I think they're going to be positioned to get bought out by one of the other big, more mainstream players. But in the DeFi space, Hyperliquid is a big dog. It's a big dog altcoin. So, they're able to pull income off of those positions. And I want my share of it. We've got SATA, which was we took our profits from our DXYZ position, which we're kind of gauging. That's going to be our cash position for the SpaceX IPO, which we're not going to be buying for a little while, but I wanted to go ahead and get my profits out while they were peaking. We were up like 130 something percent. So I went ahead and skimmed that over into SATA. I've got this set to drip into itself, and we will be riding that out until we're ready to actually purchase SpaceX stock. I do have a video coming this week on how I'm playing the IPO. Gonna go ahead and do that because I've had a few conversations about it, and I'm gonna go ahead and just line my strategy out so that way you guys can know full transparency what I'm trying to do. Last but not least, we have XXI 21 Capital, which we're down 14% on, but this fluctuates heavily with Bitcoin. Again, this is on sale. We're trying to add another 250 shares, dollar cost averaging as we deploy that $500 of margin repeatedly. We are adding to this position repeatedly. Moving on to the ETFs and closed funds, we have DXYZ, which was my proxy for getting access to the SpaceX IPO ahead of time because they hold a lot of shares of SpaceX. We will be holding on to the remainder of this position as we move forward, and we'll see what they do with the sell-offs. I've added another income position, but it's a long-term position for Eli Lilly. The RecShare Eli Lilly fund. I am got this set to drip because it is a long-term position, and until it gets to about at least $25 a week, there's no point in really using it to deploy against the margin. But Eli Lilly is another AI play for me, and it's going to be a long-term one. So theirs is very specific, and it's very interesting what they've got going on. Next, we've got Mars, which I've added, which is the post-SpaceX play, because this is a space and technology global ETF, which is a long-term holding for me. Reason being, space is one of the narratives. It's not going away. Most likely our data centers are going to end up there. And all the space companies that are in that area are going to make a bunch of money because somebody's got to send up and set up the data centers in space. So they're also, this I'll be dollar cost averaging through the SpaceX IPO period versus buying SpaceX directly as part of my strategy. So we're going to be dollar cost averaging into this as we're buying. We're grabbing a couple of shares when we're deploying the 500. YBMN is the Defiance Bitminers Option Income ETF. Now, this is directly paying against the margin right now, but we're also actively adding into this. So as we bring income into this portfolio, and now as we start focusing on this portfolio, this position will go ahead and line it out as best we can. I'm probably going to do 250 shares, which was my target for this position for Bitminer. I'll put the 250 here, and then we'll have something going against the margin while we're building up our chippy position to $5,000. And once we get to that point, the chippy position will pay down the margin, and this position will be used to buy shares of Bitminer. So that way we'll have both, and this will kind of fund the Bitminer position as it produces income. That's what we've got for the long-term holding portfolio. Also, the other thing that we're doing out of the long-term holding portfolio, now that we're shifting our focus into building up this portfolio, is this portfolio is now paying for my utilities. So it's covering the gas and the water and the electric right now. So we went ahead. That's the reason it's sitting, instead of at like 500 something, it's at $727.48, because I paid my utilities today in full early. But in doing so, from an efficiency standpoint, I like to pull that money immediately, because that card is carrying a balance and I don't want to add to it on the interest day. So whenever I pay the utilities, I will be pulling out of this pool of money now for those two specific things, because they're all bundled. The gas is by itself, but the water and the electric and trash are all bundled together the way that my city does the utilities. So we're actually utilizing this for something as well. Not a whole lot, but every little bit helps. So moving on, we're going to be moving to, actually, we'll do that. We'll be moving on, and we're moving to the big Jabba, the one portfolio that I've got sitting where it needs to be. The primary income portfolio. This is the one that everybody shows up for, because it's the one that I am mostly working out of. I've been working on. Obviously, we're carrying a big balance right now because we're chunking at that debt, and the interest over here is lower than my credit card. Even though this portfolio, I think, moving forward, I've got one more draw on this, and I think I'm moving the account over to Robinhood, because Charles Schwab is playing around about lowering my interest rate. And, that's one of the cost of capital is the business. And from an efficiency standpoint, if I'm capable of getting a lower cost of capital and still running the same strategy, then for my primary portfolio, that would just be more efficient placed with where that is. So this portfolio will probably be emptied out, and then it will be moved over to Robinhood, and then this portfolio will become my daily expense portfolio. And I think that's probably where this is gonna, when the dust settles, because of how long they've taken. That's fine. You just got to make those executive decisions. And once we get a couple of things lined up to where we can make that transition smoothly, we're going to start doing that. So this portfolio will be over on Robinhood eventually, and it's just going to be the primary income portfolio, and it'll just live over there. But let's go ahead and take a look through it. We've been making some adjustments. We've been doing some management. And we have both SATA and STRC. I went ahead and liquidated my STRC position and converted it over to primarily SATA. We've got our 10 shares. We're doing a little bit of STRC repurchasing now that we've got some of it. Both are on sale right now. So as we're bringing it in, obviously this is our cash portion of the portfolio. We are using these positions to specifically attack and chip away at my mortgage. So a good portion of all income that comes in, because we have a cushion of about 4 months, all the income that comes in as I'm prepaying, being fully invested, we invest here first. The majority of it goes into the cash position. We want to keep this safe so I don't liquidate this out on dips. Unfortunately, I have to sell stuff from down here, but I've got both SATA, which is getting ready to at the 16th of this month in preparation for that. Getting ready to go to daily distributions. We're going to see how that plays out. And then I'm rebuilding my STRC position, adding to that as well, because this is going to be bi-weekly moving forward. At some point, they're still doing the vote, but I'm pretty sure it's going to pass because it just makes sense. And we'll be able to do a side-by-side comparison on how both of these positions do. Next up, we've got our workhorse, our primary holding, our chippy position, which I've got nothing really bad to say about this. I'm pretty excited. It's a diversified chips or semiconductor options income portfolio. I don't think that narrative is going away. I also have CRCO. This position, I'm looking at from the stablecoin perspective. This is basically what's propping up the house of cards known as the American financial system, are the stablecoin companies at this point. So I don't think this is going away. It's taking a little bit of a beating right now. We're down 19%. I will show the context for that over in the Snowball Analytics portfolio, because that is a little bit misleading. Not a lot of bit misleading, but a little bit misleading. And hold on a second. I need to locations. I need to sync my portfolio before we get over there, because it's doing some weirdness. Huh. Hold on a second. Let me get in here. You know, that's part of the reason we look, because it's throwing some weird numbers. We might not be able to use that. Because, yeah, this is, let's see here. I am not understanding how we're. Huh. Okay, so we won't be using that because the numbers are way off. So I got to wait for this to resync for the Snowball Analytics context, because we made some moves today, and now the whole portfolio from Snowball Analytics side of things is screwed up, because it is showing a much worse scenario than what even Charles Schwab is showing. So we don't even need to use that. We can just run off the actual numbers. So CRCO, we're down 19%, and I'm just going to sit and eat that, whatever. When you're factoring in the distributions, it's not this bad. And actually, I think that position will be right. So let's take a look. Yeah, it's only 16%. It's like 3% variability, because this is a newer position. But, you know, when we're reinvesting, this is a target because it is on sale. Moving on, we have GPTY, which is yieldmax's AI and tech portfolio options income strategy. We've got 5 shares. We're doing a slow dollar cost average on that. We're throwing a little bit of money in there. Again, this one is a workhorse position. It's like a portfolio stabilizer. We're down 2.13% right now. But the goal of this position is, it's a narrative that I don't think is going away. And it's diversified, and it's not balls to the wall, degenerate level income from my perspective, because it's well under 100%. And normally the ones that are lower little bit more boring, are a lot easier to manage. They don't fluctuate as much. And in the case of Chippy, that one's been running. So like that's done wonders for us. Morrow is the next one, which is Marathon Digital. They are now a data center company. They pivoted from Bitcoin, so they're no longer moving with the Bitcoin sphere. I've been adding to this position. I am happy with this position. We are down 1.91%, but like the context for that is when you factor in the distributions, we are not down at all. And previously, as this was fluctuating, we were up. So this one has the ability to run a little bit too. We get a little bit of upside on that because it's an option strategy. We cycled out of MSTW and then came back into MSTW. We cycled out because we were in profit, and this is a long dated play. So this is a swing trade position for me. Coming back into MSTW, which is the MicroStrategy weekly ETF, it pays, and then it's got a little bit of leverage on it. So when we hit 65, I went ahead and pivoted, or when we got down to 65, I went ahead and started buying this again because that's what I did last time. It was a good swing trade. And you know, we're going to be riding it and getting paid while we ride this position on the upswing, because overarchingly, I do believe that Bitcoin's going to $1 million. That is my overarching thesis. That is the reason that is the core of my financial structure. MSTW, I don't believe in set and forget with things that are leveraged. I honestly don't even believe in set and forget with Misty at this point. These are positions that I will get in and out of based on where we are in the market. We also sold off and bought back in on Misty, which you can see is up 1.25%. We just bought back in on Misty today. We sold our semi position today. Now, is there anything wrong with the semiconductor position? Like, no, it was a great payer. Couple of caveats, though. I had too many positions that I did not have the ability to leverage for cash for. And since I am fully invested in living out of my brokerage account, you can't stack your portfolio with those positions or have them be the majority of your portfolio, because then you lose liquidity in regards to being able to access cash. Cash is important. And I can't stress that enough. So like, you have to have positions that give you access to cash. That's kind of the crux of being fully invested if you're not running a flat portfolio. Now, once we get all the debt paid off, I will be able to run my portfolio flat. Running a flat portfolio means that you're just using the cash that comes in and existing off of that. And that kind of gives you a budget. That gives you your budget. That's what you have to exist off of, that cash. Right now, since I have debt, we have some flywheels that we've pulled to help bolster these portfolios. I don't have that. So I am dipping in the margin to cover the difference. The deal is, as the distributions come in, and then if you're doing this with W2 income as well, you're eating into that margin a little bit, or you're building up more distribution income to eat into that margin even more and pay that off. And the interest rate is low enough to where it's like the margin interest is like $100 a month, 100 and something bucks a month. Maybe a couple of $100 a month. It depends on how much margin you're running. For me, my last one was like 100. It was 100 and some change. So as you're building that up, you get to a point to where you get to run flat, and then your budget is just what cash comes in, and then the margin really doesn't matter. And you could have a bunch of positions that you just can't leverage for cash, but you have a bunch of cash coming in weekly. And that's kind of the deal, the goal. That's the ultimate goal for me, is to run flat, because using your margin, unless you're using it strategically, just isn't a good long-term play. Like, I don't want to exist like that. And I don't want to be in a position where I'm forced I have a forced liquidation or I'm putting myself in the realm of liquidation. So for me, since this is about income, the goal is to get to your budget is the income. Next up, we've got QQQY, which is another portfolio balancer that's been doing really well for me. We're still up 6.31%. The market did have a pullback. We had a big Bitcoin sell-off. We had, QQQ went down a little bit, which brought this down a little bit. We track with the market. Hopefully they got some good trades in and we make some money. And then last but not least, we've got our old stalwart ulty, which has been back in the fold, been doing wonders for us. It's sitting at down 11.97%, but that's not factoring in the distributions. I did buy into this a little bit more. It's a little bit lower than what I want it to be. I really want it to be in the 70s as far as distribution percentage, but the market's doing what the market's doing. So what I did was, actually what I'm about to do is I'm about to gauge this up against Chippy. And depending on where Chippy's sitting, we might consolidate some of this over into Chippy. But I did buy this back up to get it back up to over $10,000 today. So yeah, that's kind of where we're at. We're nursing that margin. Every week it seems like we're doing a little bit better. Even through the dips, and through a dip like this, it's like, well, hopefully we get to buy some of the positions that are on sale to get them where they need to go. But this portfolio is pretty much done. Like, we dipped a little bit below 60,000. So we had a check come in. The check went into buying this. And then, the market obviously wait 2 weeks, starts turning around, and poop, we're back up above 60,000. Now, originally we were up at 65,000. I was feeling good about it. The goal was to get this above 60. So if we're bouncing around those numbers and like we put a little bit extra in the tank during this downturn, when this bounces back up, hopefully we will be like above 65,000, like we're being the 66, 67, something like that. But as it sits right now, no more income that comes in is going into this portfolio as long as we're in this realm. We will focus on the other portfolios unless we hit reinvestment metrics, which in this realm, we are hitting reinvestment metrics right now. So we're getting that 10% reinvested in here every go around, every week. And that's kind of the goal. So now we get to move on to bigger and better things. And yeah, so that's where we're gonna call it for today's episode. That's the portfolio. We gave the receipts. We've done everything that we needed to do to let you guys know that you don't have to be a millionaire to not have to go to work. That's one of the things that I'm really wanting to spit in the face of, is the system that demotivates you into giving up more of your labor than you have to and not being able to focus on yourself or the things that you actually want to do. For those of you who love your job, good for you. Like, you're winning. But what if what you actually are interested in, you're not going to make a ton of money at? That's where this can fill that gap. So this has been our May portfolio update. I'm really happy with where we're sitting, really happy with where we're heading. Really happy that I got to do one with the market open so that you can see the numbers bouncing around and stuff. But, we give receipts over here, full transparency. It is what it is. And we'll see you next month. It's your boy, Reckless Ray Dinero, and I'm out. Peace.
Money on my mind, yeah. Focus, got no time for games, nah. I don't play it, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Got a secured bag, that's what I came for.